Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. As we do always, we're breaking down everything that went on this week in the market, overall market trend, sectors, my specialized industry groups, looking at stocks and some of the leading stocks right now, and answer any questions that you guys have. As always, the chat is open. So without further ado, it's time for the Rapid Review. All right, there you guys go. Disclaimer, as you know, educational, informational purposes only, not financial investment or trading advice. So let's get started. Market direction. So actually, forgot to update this. My stance still in the sideways stance. Exposure levels, though, I have upped it to about 60 to 80%. So gave that a little bump. When I bring up the indexes, I'll talk a little bit about what has caused me to bump up my exposure levels. But looking at everything else, the Webby trend, and if you want to know what that exactly is, go to Mike Webster's YouTube channel. You can just basically YouTube search Webby 5150 and it'll come up, and look for his 3-day trend video. That'll kind of break this down. I just took that and broke it into all his rules into the my dashboard. So we still got choppy on both of those. On my 50-day trend, which follows a lot of the 50-day simple moving average, we're still macro in an uptrend, and we are 0.6% off the S&P's all-time highs, 3.34% off the Nasdaq's all-time highs. It's been about 70 days since we started this rally, and we had the follow-through day officially on the S&P on the 8th and of April, and the 14th of April on the Nasdaq. So if we're looking at index performance for the week, the big thing that stands out right off the bat, good closing range on the S&P's 97.1%, so closing right near the upper end, and 97.4 on the Nasdaq. Dow right in the just below the mid range, and the Russell right in the mid range in terms of the closing range. So really nice to see that positive high closing range for the S&P and the Nasdaq. The Nasdaq did lead out the week, up 1.74%. S&P up 1.23%, the Dow down 0.5%, and the Russell down 0.61%. For the year, we got the S&P up 9.31%, Nasdaq up 11.4%, Dow up 8.06%, and the Russell up 17.5% for the year. What's going on, Chad? What's going on, everybody? As always, chat's open. Drop questions, stocks, whatever you got. We'll go through it all. Moving averages, big change for the week compared to last week was the Nasdaq was able to reclaim its 21 EMA and its 50 SMA. Very, very positive to see that. We're still green on the S&P across the board. The S&P was above all those moving averages last week. The Nasdaq was above the 10 last week, but is now above all. Dow above all. Russell, still the same basically as last week, below the 10, but above the 2150, and the 200. So basically green across the board, minus the Russell, just slightly below the 10-day simple moving average. In terms of distribution, still a high amount of distribution. We're still sitting at 5 days on the S&P, 9 days on the Nasdaq. For an ad this week, on Wednesday on the S&P, we had a distribution day. On Tuesday on the Nasdaq, we had a distribution day. We've lost the 529 distribution day, or sorry, stalling day on both indexes this week. And looking into next week, we're going to see the 6.5 and the 6.9. Both those distribution days are going to be dropping off due to time. As you can see here, we'll reach 25 trading days. So if nothing else more, we will at least drop down to 7 distribution days on the Nasdaq and 3 distribution days on the S&P. But one thing to note, now that we're starting to climb a little bit, there is definitely a good possibility we could drop maybe these 2 days off if we have a really, really strong week. If that was to happen and we were to see that, then we down go to 5 distribution days on the Nasdaq, 3 distribution days on the S&P. One thing I will say, when the market is maybe in the process, if it is in the process of turning around, distribution days don't pay too much of a concern. This kind of has already indicated to us earlier that there was a reason for some reducing exposure in the market as we started to see a lot of selling coming into the market, along with a lot of the choppy action. If you've been watching every single week, you know we've been talking about this. So less of a important item here to be talking about the distribution days, because if the market does turn around and the market does follow through, these days will just kind of drop off naturally. But I don't want to ignore the turnaround signals should we have high distribution, because it's kind of prior selling, and we're proving to ourselves little by little that we're washing these names out. So um, yeah, that's what we got in terms of the distribution days. There's distribution day calendar. Obviously, we've been seeing some clustering. You can see that visually right there. All right, let's jump over and start taking a look at what's going on with the indexes. As we always do, we will start off on the NASDAQ on the daily. Um, yeah, look, here we go. Here's that turnaround, the beginning of this year. Actually, not the beginning of this year, but the second quarter of this year being extremely, extremely strong. And then going into kind of June, that's where things started to get pretty choppy, pretty ugly. And especially when we had this big, as we've talked about, this big rapid correction once we got down to this 50, we expected to see some chop, and we got just that. And the market has now, the big thing that stands out to me is we've seen this market really start to form some volatility contraction, or like a VCP type of pattern. If anybody who knows about Mark Minervini, you're just seeing these swing highs and these swing lows seem to be getting much, much tighter. Going into last week, so we have Monday right here. We had the holiday weekend, and we had Monday opening up after the holiday week. And we had a pretty calm, low volume, low volatility day, which was actually very constructive. And we followed up to start this week off by reclaiming all those moving averages. But the big concern, and I kind of talked about this throughout this week, is this very clear downtrending line was forming again an area of resistance as we just continually see. I mean, look at this: one, two, 3, 4, 5, 6 days where we were just getting rejected at this downtrending line, or around abouts those downtrending line, and probably even more depending on where you draw that line. But definitely showing it in an area of clear resistance, and one of those areas that were high on the watch list to see to the upside if we could break that. And then to the downside, we was really just watching these kind of June 9th lows. You also had the lows over here. This was just below the June 9th lows, but like you could see again, this price level right here, June 9th, was clearly showing like almost like a floor and an area of support. The 50, the 10, the 21, we were kind of chopping around through those, so not as much as important. But like I had talked about during the week, really to the upside, it was that downtrending line being the nearest term area that we were looking towards to the upside, and then the 6-9 price low area being that area that we were looking at in terms of the downside. Um, Regardless, we always look at the 10, 50, the 20, but I think that was really the key areas. And then we were kind of looking at this prior high of July 2nd as another area that we're looking to get over. So what we saw happen during the week was the rejection at that downtrending line, the breakdown below the 50, continuing to chop around, but still holding a little bit above this low of that big kind of range move. Then on Wednesday, we got a little bit more of a high volatility day. We shook out below those short term lows. We regained and actually ended up for the day. And then we saw that kind of reversal and that shakeout below that kind of short term low, which really looked like we were kind of creating that VCP type of pattern. Where on Thursday, we gapped up and we kind of had a really, really strong day throughout the day. And that day closed above that downtrending line, which was that first kind of signal of like, okay, we're seeing some positivity in this market. We're starting to see what looks like some hope that things are starting to turn around. And then on Friday, we opened slightly down lower. We pulled in, we broke the 50, found support at the 21, bounced, and then we were able to take out the prior day's high. We were able to stay above, and then we saw actually a flip of resistance to support on that downtrending line. And then we also took out that July 2nd highs. So when we're looking at really what went on this week, is we saw a lot of key levels to the upside that were taken out. and a lot of key levels that we need to maintained. So we were able to get above the 50. We were able to get above the downtrending line. We were able to get above that little kind of short term, most recent swing high. And then we also saw, this is just something to note, we also saw that swing low is kind of getting higher up from those prior swing lows. So the big thing, again, VCP type action, break to the upside, breaking, taking out key levels. The big concern, obviously, seeing like look at the decrease in volume. So we definitely saw a big drop in volume. Ideally, would have liked to see a really high volume move. But that could be just yet to come. We'll kind of keep an eye out for that. Regardless, though, clearly starting to see some hopes of a trend change or the early signs of a trend change. From here, we're looking to see if we can have some follow through. Can we maintain above that downtrending line? Can we maintain above those moving averages? And then could we start to get some push to the upside? Hopefully, to have some volume coming in to show that there's some institutional buying coming in. And right now, really, the main area that I'm keeping a really close eye on is not only the May 14th high, but we're also looking right around these highs area here, which May 14th kind of coincides with the June 15th high. And then we also have the June 16th high. So kind of a clustery area of here that I would expect to possibly see some resistance. And if we do rip through those areas and go higher, that's definitely a very positive sign. And then really just leaves that June 1st area. So as you guys know, this is just how I kind of go about the market. I looking at key price levels, looking at areas of support and resistance, looking at the moving averages, and knowing what is normal action within the trend, which as of recently was kind of staying between this downtrending line and these lows and chopping around. What is a break to the upside that's positive, which was at first glance this downtrending line and these prior short-term highs, and then to the downside was these lows right here. So looking like in terms of the action that we're getting the break towards the upside as opposed to the continuation of the sideways chop or a break to the downside. That simplifies pretty much how I'm looking at the overall market. If we jump over and we take a look at the S&P, um, S&P has been much stronger. S&P has had less of a downtrend to it, more of just really a sideways chop, but still having that VCP type of action and then breaking out from that kind of most recent swing high, and seeing that swing low maintain off that 50 and holding above those moving averages. So we still have some room to make up. We're still within those all-time highs, but overall very constructive action also on the S&P. And again, very declining volume, which you really don't want to see as we're kind of breaking levels, but still nothing super concerning. Real quick, we'll jump back over because I forgot to look at the weekly. Charles, you got some stocks. So biotech has two William O'Neill funds, and then Liz, you got a list there. Absolutely. We'll take a look at all those names along with some others. Um, so here, look, we could see one of the better closes that we've had in a while. Again, low volume, and then on the S&P, again, one of the better closes that we've had in a while, but very low volume. Let's see. We got the Dow right here. We'll do a quick look at that, though not super concerning. That just continues honestly to just kind of trend and act normal. The Russell, nothing really too alarming here. Just continuing to trend higher highs and higher lows, and then the mid caps. A little more of an aggressive breakdown of the mid caps earlier in the week, looking more like a possible shakeout, but we'll see. Overall, the trend doesn't look broken, and we're kind of just possibly just floating around here, and we'll see if we could this was a shakeout and continue that trend to the upside. Nothing too alarming just yet. All right, let's go back and get over to these slides. Real quick, we'll go through events. So going into next week, which is this week right here, we have an options expiration happening on July 17th. So some witching happening. Other than that, nothing else happening for the next week. And in terms of earnings, All right, my earnings dashboard hasn't really fully updated yet, so this will take a little bit of time. But yeah, keep an eye out, look out for earnings. Nothing much else to say there. For sectors, all right. So in my rankings on the sectors, this is a little bit more long term. We are still seeing tech in number one. We're seeing industrials, healthcare, energy, materials. Again, this is a little bit more longer term in terms of the trend that we're looking at. But if we look at things on a daily, we'll see that materials had the strongest week this week. Consumer staples, communication, utilities, energy, healthcare definitely weakest. But let's do this. Let's jump over to Deepvue and look at these charts. And this is one of those I feel like it's a little easier to just look at the sectors and we'll talk what went on. Let's see. Oh, and sorry, I was looking at the daily on the weekly. We'll go back to that so I can correct myself. All right, weekly energy, tech, communications, financials. Weakest materials, healthcare, industrials. There you guys go. Sorry about that. All right. So we're at the weekly RS on these groups. We're on the daily. So energy had a strong week, but let's be honest. This is breaking down. It's below the 50. The 50's downtrending. Not the pool I really truly want to be fishing in. Technology though, technology being very constructive, very similar to what was happening with the indexes where we kind of had this consolidation. We looks like we got to shake out below the 50 and then we kind of reclaimed all these moving averages. Still in more of a downtrend overall, looking like it wants to turn around and break, but we will see. Overall, I don't think that technology hasn't broken down completely. It's really just been in this choppy sideways and sloppy action, and we'll see if it can resume an uptrend from here. Communications is broken down, nothing really to worry about there, below the 200-day simple moving average. Financials has been a group that has been very, very strong, a group that we talked about, I believe, 2 or 3 weeks ago. Um, yeah, about 2 weeks ago, where we were seeing this really, really tight action. This looked like it wanted to break. We saw exactly that happen. We got right to those all-time highs. And then what we expected, you saw some resistance after what was a really, really strong move. We pulled back. We're holding above the 10-day simple moving average. And now it looks like we're possibly making our way up back to those all-time highs. So this looks like it really wants to keep its trend going. This looks like it wants to break out to all-time highs, and definitely a pool to fish in. Consumer discretionary, sideways, choppy, right around that 200-day simple moving average. Nothing to write home about. Real estate's just been kind of in this choppy action, same as that. Utilities. Utilities looking like it might want to start turning around. We saw this kind of downtrend. We broke back above the 200 after breaking below it. We got back above the 50-day simple moving average. We're starting to see a little bit of tight action holding above that 50-day, and maybe we'll see this kind of start to turn around. Industrials, strong, broke out, paused right after breaking out, running up towards all-time highs, pulled back a little bit, held that 21 EMA. We'll see where that goes. Consumer staples, sideways, choppy, nothing to write home about. Healthcare, this is what I was talking about. So healthcare, on the weaker side this week, but to be honest, not too surprising. We have this big kind of base. We started to make some higher highs and higher lows within that base. We shot up right towards those all-time highs. We pulled back very quickly to the 5 SMA and then surged higher. And then we kind of squatted right back down, and looks like we're kind of finding some support right at those base or that prior resistance or the highs of that all-time high base. And volume did look like it tapered off a little bit. So healthcare still looking extremely, extremely strong. Materials kind of in that sideways choppy action. As much as we had some strong days and things there, not really something I'm too concerned about. And then, like we said, we're back up to energy. So if I'm looking at the sectors, look, tech still in the spotlight. Tech still something I need to keep an eye on. Financials, definitely an area that I really want to keep an eye on. And healthcare. I think those are the three groups that stand out the most to me: healthcare, financials, and tech. Really where I want to kind of keep my focus when it comes to the industry groups. So we'll go back, and speaking of industry groups, let's look at my industry group ranking. So I was accessing Discord, trying to understand where my industry group ranking, how it's calculated, what makes the ranking. So to give you a quick kind of understanding of how this was kind of developed, the first thing is obviously building out the groups, deciding what names go in what groups to have, things like that. Um, and basically, the goal was, especially where you look at a lot of industry standard sub industry groups, they have things like semiconductors, very, very broad based. And I think that's one of those groups that really deserves to be broken out. And then you have some things like oil that are broken up into so many groups that are just so highly correlated. And being those legacy groups, just I think there needed to be a change where we started to see some specialization in the groupings between some of things like semiconductors, memory, clearly showing the most strength within the semiconductor space this year, and being able to identify stuff like that because you know, it's where the money seems to be flowing. And again, these newer industries, I think, deserve to be a little more specialized. So that's what kind of started me to break things down, break up some of these groups, and then start to look at some of the themes in this world that are changing the way we work, live, and play, like AI, data centers, cloud, optics, photonics, all these different things, crypto mining, drones, and starting to specialize those groups. And then once those groups are specialized, essentially what happens is we're looking at the performance of these stocks within a certain time frame, and looking at the relative strength within these stocks within a certain time frame. And then those time frames, so for my longer term, are going to be more based on heavily weighted towards the 3, 6, 12 month type of time frame, and showing what would be a longer term trend, and the weighting of it allowing there to be, it's not just strictly a 12-month RS, just like how IBD kind of does it. Same thing with their ranking. So very, very similar approach to how they do things with a long term, where yes, you have that 12-month kind of ranking, but you also have some weight put into 3, 6 months and things like that to allow the fluctuation and the rotation to really show itself. If we only waited for a 12-month performance to show, then you're going to see a kind of poor level, and it's all kind of scored and everything. And I could probably do a really, really long, deep, long video to give you exactly how this is calculated, but just kind of understand that it's based on the stocks that are in each group, the performance of those stocks within a certain time frame based on the price action and the relative strength, and then the weighting of those based on different time frames. Each has their own weight, 20, 30, 40%, I forget the exact amount, and then that produces a score which then gets ranked amongst everything. Short term then comes in, and then on the short term side, this is more weighted towards the 1 month perspective, looking at the last 2 weeks, the last 4 weeks, the last 1 month, and I forget what else is kind of in there. All weighted to eliminate too much noise, eliminate too much rotation, but also see a little bit more what's happening in that shorter term time frame, which is especially useful when we got times in the market we're seeing a lot of rotation, which has been recently, or the short term pullbacks or short term corrections, versus where your long term ranking a little bit more useful when you're seeing a broad based market correction for a longer period of time, um, or a longer term uptrend also. So the combination of these two allowing me to get a good feel for where things are moving short term, where things are showing strength long term, and then give me the ability to adjust where I'm focusing in terms of sub industry groups. All right, so let's talk about what actually went on. So in terms of the leaders for the week, you guys can see those here. Semiconductor memory returning to leadership. Um, AI data center returning to leadership. AI cloud returning to leadership. So we're starting to see, and you got some oil and gas. We're starting to see some of those prior leaders uh, showing some strength this week. Some of these are looking better. Some of these have found some support. Some of these, for a longer term position trade, are doing what you would think they would want to do, which is definitely super positive. On the losers, space economy, LIDAR, quantum computing, kind of see all those names up there. Nothing really. much to say, though. You can kind of see what's going on right there. For the short term ranking, which is where I've been paying attention a lot lately, I want you to also kind of pay attention to what's going on over here where it says confirmed and emerging. Confirmed, right, means that these are falling within the top 40 industry groups. So not only is it showing up within your short term, but it's also showing up in your top 40. Emerging means that it is not in the top 40. And what this allows me to do is say that if we have something confirmed, it's showing strength not only short term, but it's also showing strength long term, which is the ideal situation. If we have something that is emerging, then it's kind of like, where are we? And sorry, it's not just where it falls; it's also the divergence of where it's ranked in the long term and where it's ranked in the short term. So we're kind of looking at both the long-term ranking, the emerging, the divergence. So for instance, right, cybersecurity digital is in the top 40. It's very high in the short-term ranking, but not as high. There's a 32 spot divergence in the long-term ranking. So this shows me that this is starting to hopefully rapidly climb the ranks within the long term. Again, I could probably do a pretty full breakdown of how this actually works and how I use it. But from where we're at right now, we talked about this last week. Cybersecurity, biotech names have been very, very high up on my radar because they've been showing so much relative strength all the way from the sector level down to the short term level. And a lot of these also showing strength within the long term ranking. So that has still remained the same. And you can see all the different types of groups that fall into that healthcare space. Other than that, we're starting to see some of these financial groups, right? Payment processing, insurance brokers, possibly starting to make their way and climb up the rankings. And yeah, that looks to be the same. So now we're seeing, right? We're seeing this on a sector level. We're seeing this on a sub industry group short term level. And then now when we start coming in here, the green shows that there's just some real rapid advancement. Again, biotech, biohealth genomics showing some rapid advancement there. Semiconductors still holding strong though up there. You know, we'll look at some of those names, but still holding strong. AI data center, everything up there. So you can get a kind of quick look at what's going on in the top 20. And this kind of like summarizes where I think a lot of my focus is. It's definitely in the healthcare. When it comes to healthcare, it's mostly in the biotech and the genomics space. Um, then we're still looking at what's going on in the semiconductor world, specifically memory, specifically AI related networking, things like that. So if we come in here, just to give you an idea of some of these names, ANET and things like that. So not losing sight of those long-term leaders, while also paying attention to some of these short-term leaders as well. And here we have some rapid movers. So GLP-1s making a huge, huge advancement. Cybersecurity making a huge, huge advancement. Healthcare. That's really kind of it. Space economy taking it the worst. All right. So let's jump over to Deepvue. Let's start talking stocks. For those of you who don't know, I am a Deepvue partner. This is a tool I use for all my stock screening, my chart analysis, my fundamental, and my technical analysis. By far one of the best tools out there. They're running a 33% sale right now because they got their partner company with TraderLion, which has the TraderLion conference, which is starting very shortly. So definitely check that out. You are not going to find a larger amount of trading knowledge for free from market legends like Jim Ropel, Peter Brandt yesterday. Today you got some newer guys like Ariel Hernandez, Brendan Shannon. You're not going to find an amount of free market wizards level information and talks clustered weekend after weekend than you are going to do are you going to see in this. So, but because their parent company, they're running a 33% sale. If you click the link in my bio, or you click the link in this description of this YouTube video, bring you to my link. And then if you use any of the two codes, either the free month or there's also the Bobby 12, you can get another 12% off. So you can get 33% off and then another 12% off on top of that. It's comes out to ridiculously cheap. And they are making this tool insane. There's AI tied into it. There's full customization. You have all the data you could possibly want, all the fundamentals. I actually have to kind of mess around because they've updated some stuff within putting earnings and sales and things. And there's pattern recognition now, as you can see here. It's just, again, I could sit here and I could chew your guys' ears off just talking about everything with this tool. But if you've been here long enough, you guys know that this is what I use, and there's a real big reason why. So, all right, as always, we'll start off with my stocks, which you guys can see on the screen. You guys know CrowdStrike. Been building this up from bottom of the base with some low risk stuff. Again, seeing with all the rotation that was going on, seeing that there was a huge shift towards cybersecurity, seeing the massive, massive move that this has made in the trend change as it took out the 200. And now that it has established itself above the 200, all the moving averages were sitting properly. We saw a base pattern starting to form. We saw some very constructive, tight action. This is where I kind of, excuse me, started putting some focus in, slowly built into this position. And I'm pretty heavily weighted in this right now. Now, this name, this prior low is definitely a key area I am watching. We have built this nice, beautiful cut pattern, broke out, and then we pulled back in. And this, I had talked about this, kind of somewhat expected. Kind of expected to see us break in here and form some sort of a handle and hopefully shake out some of those weak hands. But now I want to see us at very least hold this 21. This 21 at this point has now become my 100% kind of break even, not break even, but my 100% you know, ultimate stop. But really, I want to see us hold above this prior low, and thinking this is looking very constructive. I have built such a big position now, so I'm not looking to add on anything. If we do get a nice break and I do get a decent percentage, I'll pull some off just to completely de-risk everything and lock in some profits. But this name is just, it's been showing a and some good RS. The RS line has been pretty good. In the last week, it started dip down as it's kind of pulled back in. But yeah, this has been one of the names top on my list. And last night watching UFC, it was all over. They do some advertising with them, so that was pretty cool. Eli Lilly, we're talking about biotechs. I normally try not to trade biotechs because they rarely have earnings and sales. Or I know Eli Lilly's a little different, pharmaceuticals technically. It's more big cap, but they tend to be much, much more volatile. And this one isn't. This is more of a bigger cap name that falls into that healthcare, pharmaceuticals, biotech, genomics space. And this was being super, super constructive. Um, so this was a name that I had kind of bought as it kind of pulled back in after that breakout, found some support at the 21, was starting to be really, really constructive. And I've sort of built a position in here. It started to get a little looser. It started to get a little sloppier, but other than that, everything's acting, completely normal, completely healthy. The group is acting completely normal, completely healthy in terms of the healthcare sector. And yeah, this is, again, another one that I've built a large, about 30% position in, and which has been showing some really, really strong leadership. Now, going back into some of these prior leaders, Dell, which, I mean, everybody's been talking about this name. It actually concerns me that everyone is talking about this name all over every friggin' platform. But this has been super, super constructive as it took out this June 22nd area and started to show some strength. I put a little bit of a position on here. And yeah, we're gonna see how this kind of interacts. Can this break out and on all-time highs and keep running? Do we get where it hits those all-time highs and squats or pulls back or handles? Do we get a breakout and a squat? Regardless, the trend of higher highs and higher lows is looking good. We're sitting right below those all-time highs. Was able to get in a position. Somebody asked me on Discord, well, why don't I just wait till that 469.47 area. Um, I try to get some of these earlier entries because if I did buy here to buy and go back down, I'm looking at a pretty steep drop that can realistically happen, still creating those higher highs and higher lows and holding that 21 EMA. So that's the kind of reason for me being willing to put some of these positions on as they're starting to show strength, as they're creating those higher highs and higher lows, and a little bit more of a swing trade style entry. Everybody has their own different style. This is just how I approach it. Yes, there's nothing wrong with waiting for this. Maybe this forms a handle right here and you can add there. You can get in there. Maybe it breaks out to all-time highs here and you add here, or buy here. Completely, fine. Everybody's got their own different ways of entering these names. There's as long as you're assessing your risk and as long as it follows your trading strategy, there's nothing wrong with either way. They all have their pros and they all have their cons. So just to answer that question on here. But yeah, look, Dell definitely one of those names that's been showing a ton of leadership. The constructiveness of the technical pattern, the beautifulness of the fundamentals on this name. Can't really deny that. All right, so let's start getting into some of the names that you guys have put up on here. Liz, you said NetApp. Okay. Yeah, look, this is beautiful. It's on one of my watch lists. The fundamentals are accelerating. The sales, the earnings and sales are accelerating. It's, not anything to write home about, but, overall, you see some acceleration. We see some institutional sponsorship starting to slowly grow in here. Relative strength as of lately hasn't been so great, but overall it looks pretty good. It's just really the 1 month. Everything else looks really good relative strength wise. RS line looks healthy. ATR not too crazy. Good ROE. We're above all those moving averages. Everything's trending in the right direction. So from a fundamental perspective, no, this looks super good. It's got to those moving average. It's kind of chopped around, shaked out, tightened up, and now it's starting to make its way up the right hand side, hopefully forming the right hand side of the base. For me, there's no real area to enter right now. This is why it's just strictly a watch. Where, I guess you could argue, well, I can, buy now and I'm only 5% if I just use the 21 EMA as my stop. Yeah, you know what? That's fine. That's if you're assessing your risk that way, and that's kind of how you want to approach it. Completely understand it. Um, Other than that, I think this is one where I'd like to see at some point it kind of pull back and maybe tighten up and use that as an entry, or maybe I got to watch this come all the way up here to do the same, or um, move sideways, just some other sort of not just a perfect kind of turnaround like a cup with a handle, um, some ability to kind of add into this. Like I think if you were somebody who bought down in here at this tight area with like super tight risk, good for you. Um, look, this is kind of very similar idea of that tightness that I use there. Lily a little different because it kind of broke out and then pulled back and squatted right there. So a little different versus something that's kind of inside a base, right? You're expecting a little bit different action. Um, More rapid pullback and tap versus tightness at the bottom of a base. But yeah, no, I think NTAP's definitely a really good name to watch. You had a real strong rapid advance, very similar. We're getting this, break, trend change, turnaround, gap up, super strong move. Not a high tie flag because of how deep that base is, and but really a breakout run up and just we're getting that base forming. And for our style of trading, this is really the first true, I think, opportunity for most of us to get into some of these names now that it's consolidated and formed some sort of a consolidation pattern. So love this name. Think this is a great one. Um, Beautiful call out. Chi, this is another name that a lot of people have talked about. For me, this is extended right now, but if you own it, beautiful. It's doing everything you'd expect it to do. It's acting healthy. Depending on where you bought it, you're probably sitting purity right now. But I think this is extended, and this is just kind of gone on and went. And that's really all we got on that. Yeah, and NTAP almost filled the gap Yeah, almost filled the gap. But for me right now, it's just I look, yeah, I get 100% we want to fill the gap, but for me right now, this is just a really beautiful consolidation, really beautiful pattern. We already broke through the gap. We kind of came back down. So yeah, you want to see us get back up to those levels, but that's where that all-time high. I think what I'd expect at the very least is either right around here to get a pullback or maybe right up here to get a pullback just based on technical analysis and psychology of humans and how they act. People who bought in here that have been in the red, there's going to be probably some selling pressure coming in right around here, um, which we kind of started to see the first little inkling of. But yeah. Next up, ESTA. Don't know this one. Establishment Holdings. So another name that healthcare name. So that's good. I like that. Big consolidation. Really just kind of trending nicely, pulling towards that 21 EMA. Okay, fundamentals on the fundamentals don't look bad at all. Institutional sponsorship, bad ROE, but smaller in terms of importance. Some decent relative strength, and yeah, broke out, continuing to trend higher. In terms of entering something like this here, not my style. Maybe if there's somebody that wants to just like would have bought right off of this 21-day retest. Maybe somebody bought on Friday off the 21. Cool. I'm not going to argue with entering a name that's performing very well with a low risk entry using something like that for a stop, but that's just not my style. So, but that would be fair risk. And if you own it, it's acting great. It's acting normal. It's something worth paying attention to. Slab, silicon, whatever you want to say, lab. Something tells me this is a buyout. This is what's great about Deepvue. We're going to pull this up. I'm going to start a new chat. We go, was a slab bought out or is there, can't type, news of a buyout? All right, we'll let that do its job. And this is what's sick. And they've done a pretty good job of has not been reported of being bought. Oh, I can't read as fast as it processes. Not having to leave your app and just to do this. Silicon has not been reported bought out. No credible news of an announcement of acquisition or buyout deal in the recent market of challenges checked. Few still listed trading in the U.S. Unlisted normal. No merger acquisition headlines. Just going to play around with this. I'm gonna assume that this was bought out, or there's news of this buyout. It's kind of going. I'm gonna assume this was bought out just because of how it's acted, the gap up, and then it's just kind of barely moved. If somebody knows the answer to that, let me know. Because this is very interesting. What is the move from here to here? 7%. Yeah. It screams buyout, but I could be wrong because it's not coming up right now in AI. So, but that's not always 100%. All right. Let's see. TFIN, Triumph Financial Banks, financials, great earnings. Some real good earnings acceleration. Okay, nothing really great on the sales side. Institutional sponsorship somewhat flat. A little bit of growth. No ROE. Low ATR. Not the greatest RS. A little bit choppy action. Not the best of the best. This is a regional bank. Is this where EPS doing 9 days? So we got, and you got this little flag on Deepvue that reminds you, and Tez says, "Hey, earnings are coming up. Look at this flag, and if it's red, it means it's very close." So 9 days, maybe inside buying slab in anticipation for a buyout. It's not only just I wouldn't say inside buying because we're also not seeing selling. Like that volatility is not only just buying, but it's the lack of selling is giving that lack of volatility. Because so buying is one thing. Because if you have a lot of inside buying, you're going to see maybe a move up. But if you have a lack of selling, lack of buying, lack of selling, and you're getting that stabilization of price, very often that means that there's some sort of buyout happening. But again, I couldn't find anything. If somebody else wants to do some Google research, be the Jamie to my Joe Rogan podcast, that'd be sweet. Appreciate it. Yeah, so the same look. I think it's strong, right? It's corrected, it's rallied, it's trending, it's making higher highs, it's higher lows, it's finding some, you know, resistance right at those all-time highs. Maybe it'll tighten up. My question to this is like, is this the best of the best that's out there? Is this what you want to trade? You know, I'm sure there's many different ways you can get in on this. You know, we're pretty tight to the 21 EMA. But again, is this the best of the best? Is if you're maybe only owning on the higher side 10 names, on the lower side maybe 5 names, 4 names, does this fall into the top 10 names that you want to be in? Do you think that this is going to really push your portfolio to outperform? You know, a financial name in a regional bank with a chart like this with a very low ATR, it's just not where I want to keep my capital personally. Cisco. I don't know why that made me think of my wife's gonna love this because she's a big Christmas movie person, being born in that season. When Will Ferrell says Francisco, Francisco in the movie Elf. All right. It's funny because I don't know if anybody's laughing or not. I'm just sitting here by myself. All right, Cisco. um, this is your big cap, your normal, big name, been around forever, legendary stock within the market that has made people a lot of money and is as a CANSLIM model book name from years and years and years ago. Everybody should have heard of this name if you're a CANSLIM trader. Forming a pattern, looking like it's very similar to the market, to be honest, right? It's breaking a downtrending line. If I can click, breaking a downtrending line, bouncing off the 50, rallying. It's just a little early right now for something that I'd consider to enter. So a little early for me to enter. I'd rather wait to see us make a higher high. We saw this kind of area right here where there's this clustering of price action. Just try to talk out loud so people kind of, right? We see this kind of area of like tightness over a couple of days, and we broke down, bounced off the 50, and we're back into that kind of tight range. I'd like to see us make a higher high on a name like this before I'd be considering to get into this. Same thing. This is a little different from the last name, a regional bank like Cisco. You can see this name can move and does move, and it's a big player in the tech space. And if tech and communications turn around, I think this, really this falls into that networking side, especially of AI. Like this is a little different, even though it's a low ATR name, not the same as like a regional bank. A watch, a wait and see. I just don't want to get into something like this too early. Knowing that we've just got back into where this price range is kind of been sideways. So, you got to remember, and a big piece of how my trading strategy has evolved over the years is thanks to Dan Zanger and his analysis of just price action, support, resistance levels. And a lot of that makes you is CANSLIM based, right? A lot of the CANSLIM patterns are based on psychology, is based on where there are buyers and there are sellers, and understanding how people interact when they are bought or sold, and different areas of support, resistance, things like that. There's probably a good chunk of people that were buying in here off the 21, and good chance people held into here and possibly shook some of these people out. Maybe it shook them all out, and maybe we rip right through. But there's a likelihood that we get back into here, and some people are just like, all right, I'm tired of this, wasting my time with this name, and they end up selling, and that selling pressure could cause some area. But if we get through that level, now everybody in this area is all in the green. The likelihood of people panicking and selling is a little bit less. So that's why I'm putting a big weight into this area and wanting to see us take that area out. I'm not going to get too deep into strategy and how I approach things, but just understand that for me, the kind of support, resistance, buyers, sellers, pressure of buyers and sellers, and just the market, which is a constant battle between is there more buyers, is there more sellers, and dictating, as it is a market, what the price does based on supply and demand, is where I'm kind of getting my analysis on this one. So just understand that. Dell, we already did. All right. So Charles has CGON. Hope you're still in here, Charles. This is a name that I had, I think, last week on my spotlight list. And I kind of pulled it off to the side just because I stay a little further away from biotechs. But this is acted beautifully, man. Beautifully. Beautifully. The entry could have been many areas in this. The entry, I think, the ideal entry, and where I would have likely taken this entry if I was continuing to want to purchase this name, would have been on Thursday, because we came back up. Some people might have bought on Tuesday, right? As it broke. This was the Tuesday, 2 Tuesdays ago. But then we came back in, and that was somewhat expected as we've had this rapid rise. We're starting to get extended. We've now pulled back, tightened up, and we've broke here. So this decline, handle, tight break right here. We're now starting to see some resistance. So from here, the question becomes, do we just continue to rally? And is this more like a cup with handle type of breakout right here? Or do we get maybe more of a VCP? Do we get this maybe another pullback as we start to see resistance here, tighten up for a couple days, and then break higher? I don't know. So if you're in this, and this is something that I would like people to try to do for me, just so I can portray a little bit more constructive action to people asking about stocks, is, tell me, hey, I'm looking to buy here, or hey, I'm just watching this long term. What do you think? Or hey, I bought this last week, or I'm in this name, or I got a 30% cushion. Give me a little context, because that's one of the things, right? We can throw tickers up here all day long. The context of things is vastly different, right? So while we're here, right, SanDisk. This could have a lot different context for many, many people, right? Let's say you have a long-term position trader who bought back in, let's say, trying to see. All right, let's say you have a long-term position trader who bought way back in the beginning of the year. And I actually bought back in the beginning of the year. This was one of the names that I owned back in June. This was what helped me get a good, actually, this was the day, I believe. I think it was the second, as it broke like in a declining line. But let's say, right, you're somebody here. And the conversation on this name for that person versus the conversation for somebody who bought here is a little bit different, right? The weight of somebody's position, like there's always a lot of context to a lot of things and the style of people's trading. So just keep that in mind. Um, so if you guys can kind of give me a little bit of context, it'll just help me to better tailor my response to you guys. Understanding like, hey, are you telling me this because you are looking to buy it? And I see it's super extended. I'm just gonna say, look, it's extended. Or are you asking me like, hey, I own this name, I got a 20% cushion. What do you think? How's it behaving? And then I can kind of tailor my response a little bit that way. Yo, what's going on, Finn? I don't really do too much of that Doctor Wish GLB. I've heard of it and I understand like a little bit of the context of it, but you know, I don't understand it fully. One of those things I will say, I am not a big indicators guy. Right. I'm a big simplicity of price action, of support resistance, moving averages, volume, relative strength. That essentially encompasses. You don't see like RSI. You don't see a lot of the other anchored VWAP or Fibonacci or a lot of these other indicators. Now, don't get me wrong. I'm not saying they don't work. I'm not saying they're not good. And everything we do is at best a slight edge, a slightly better than 50% odds given the right environment. Key context given the right environment. But I keep things very, very simple. I like to just look at the price action because if you really think about it, right, all those indicators are all based on price action. So I get the idea of the indicators do make things easier, right? Relative strength obviously is a great indicator. It helps you understand the ability of, it's not really an indicator, but it helps you understand the strength of a name compared to the indexes. For me, I use the QQQs. You could also, most people tend to use the S&P, but so things like the Dr. Wish GLB, things like RSI, things like the Webby RSI, the RMV, which is Richard Moglen's thing. Like I said, anchored VWAP. All these things, they're great, and I think they work for people, and people use them. For me personally, I know that all of those are just based on price action. To simplify things, I'm looking at support, resistance, swing highs, swing lows, um, and the trend of the stock is really what is helping me to make my decisions on things. So just to, I know I'm kind of going on a tangent. You guys know me. I do this all the time, but all right. So looking at some of these bigger names, right? SanDisk. Um, exactly. Exactly. Keep it simple. I actually have a shirt that says keep it simple that I've wear on here all the time. So keeping it simple, looking at SanDisk. Look, this name has just been a absolute just. This has made me the most money this year, and this is one of those names I have bought and sold into this name multiple times. Like I mentioned early in June, I believe I'm almost 100%. It was June 2nd on this day right here. I bought had a decent move. I didn't get the full 200 something percent over here. Um, then I bought on the follow through day on the 8th. Then I added back here, I added here, I sold here, and I have not added here. The reason I've kind of stayed a little bit further away from this is just you're seeing a little bit more of a character change. You're seeing things get wide and loose. You're seeing things get sloppy. Um, we're starting to get pretty far along on this trend. Now, I won't deny it was a bullish week. It was a shakeout below the 50. It was the first time we tested that 50. It's the first time we tested that 10-week simple moving average. It ripped through it and it reclaimed it. So I'm not going to lie and say that this is bullish, right? Um it's just sloppy right now. And what I think is people need to take into context that there's a difference between getting a breakout in a new market around here, right? Market correction, we're moving sideways for a long period of time. This is clearly bucking the trend. It does reverse, but it's still showing a lot of relative strength. It breaks and it just runs and leads the market. There's a difference between the first test, the first pullback here, the second pullback, and now what was the third pullback that failed. The difference now is I'm after we've gone on a long run, we've had a couple retests, a couple pullback buys. I'm not looking at this as a pullback. I'm looking at this as a possible consolidation pattern. If this is going to remain bullish and if this is going to just pause before it continues an uptrend. Um, so with that being said, I don't want to buy here. And I used to do this. I used to get trapped into this a lot. I used to say, well, this is a prior leader. It's got a big drop. It's at the 50. I'm going to buy here. And then it just chops around and it chops me up, especially a high ATR name like this. And I'm buying, and I've done this a lot. It's kind of hard to draw a downtrending line. It's sloppy. It's hard to analyze. Like, is this a bottom? Is this a dead cat bounce? Are we going further lower? Are we going to chop sideways? The 50 is fine, right? Everybody could say, well, found support the 50. And yes, that's institutions will tend to support that level 100%. But that doesn't necessarily mean that we're off to the races from here. And more likely, the same way, when we get that kind of retest of the market, more likely we're in for more of a consolidation and a sideways action. So I would expect this to base. And I would expect to now see more of a traditional CANSLIM style, longer term base if this is going to continue. I could be wrong. This could go completely higher. And that's part of being a trader, is knowing that I can be wrong. But that's the reason I'm staying away from this name. Looking at some of these other names, same exact thing, right? Just into the 50, finding support at the 50. So with these memory names, finding support, right? What are some of the other memory names out there? MU, another name I traded. This MU looking a little stronger, but um, this could be the low and we could turn around from here, but I know that likely if this is the low, we're going to have some sort of a basing pattern. There will be another opportunity for me to get into this because it's likely not going to shoot up from here. It's likely going to create some form of higher highs, higher lows, some tight action, something along the lines that'll allow me to get in on this name. And if not, oh well, so be it. It is what it is. I'm not going to greedy between these two names, MU and Sandus. They've done basically the brunt of the work my portfolio is needed for this year. So, all right. Also looking new entry on SanDisk and MU. Yes, it does look sloppy now, which is why I've not re-entered, but it could change. Exactly. And that's the thing. It could change, right? We could see this come in here and just tighten up. We could see some over the next 2 weeks, some VCP type characteristics. We could see this hug the 50, like super, super tight. All of a sudden, it just starts tightening up against the 50. We could see it retest here and tight. Like, there's so much that can happen. I just feel like in here, we're in just kind of a little bit of a choppy chaos. And I like to see uniform, right? You know what triggered me to buy SanDisk the first time? It was just, it was trading very uniformly, right? It was like, just sideways, 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 sideways. And then the tight here. And then this day stood out because it was a tight into the 10 and a bounce and a strong bounce and high volume and a taking out of all these levels right here. That's what kind of triggered it. But it really was the tightness and the uniformity and the higher highs and higher lows and that's what really made this just stand out like a sore thumb. Is it was just nice and clean and constructive and almost, I don't even want to say this because people are going to take it the wrong way, because the goal is not predictability. The goal is managing risk and probability. But in the sense of probability, looking at things, the probability or the predictability, however you want to label it, was like, all right, we're getting higher highs, higher lows, tighter action, getting closer to this kind of area. And we just saw a super, super tight, low volatility action, tightened up right to the 10. And then once we saw this kind of aggressive move to the upside, it's like, all right. It seems like sellers are pretty exhausted right now, and some buyers really stepped in. Like, this is telling me like selling kind of got exhausted. We broke to the upside. Okay. We could have broke to the downside too. And that was it. Buyers got exhausted. We broke to the upside. All right. Sellers must be exhausted at this point because it just got super, super tight. Now buyers bought some and it just popped. This looks a little easier the way I showed it. That is beautiful. That clean action. Even, here, it's just much more uniform of just trending highs, lows, up, down. We're like, look at here, like we're just getting erratic. Big difference. Big difference. Same thing in just looking at names that I bought, right? CrowdStrike. Look, just much more uniform, much more tight. Starting to get a little sloppy, but maybe we'll tighten up here. Eli Lilly, right? Just trending nicely, finding support, starting to trend. We're just seeing that uniformity is really what stands out to me. Pretty hard to say where rotation is going right now. 100% agree. 100% agree, right? Because we are seeing, right? You're seeing the crowd strikes. We're seeing the healthcare. We're seeing the, excuse me. All right. Sorry, I get a sip of coffee. We're seeing the healthcare. We're seeing the cybersecurity space where they have gone on a great run. They've shown tons of relative strength. They're getting a healthy pause. And then we're starting to see some of these prior leaders coming in. We're starting to see some back move towards technology. So it's very hard to say, like, are these Eli Lillies in the crowds, are they done? Was this just a little little pop, and then now the money just rotated here quickly and it's rotating back into those prior leaders? Based on the patterns, want to say not necessarily. I want to say those other names are not dead and they're just still working things out. And I think that these names are just taking healthy pauses. And I think there's some rotation, but there's also some names that are just working things out. So it's very, very difficult. It's very difficult right now to fully understand where the rotation is. Um, Okay, CJ says, or Chad, sorry, I do that too all the time. NTAP has more down days and up days in the base year. William O'Neill says it's not as strong unless there are more up days than down days. Well, it's forming the pattern, right? So part of this, right? This is why we said this is a watch, right? This is why we said that this is definitely something we're paying attention to because of how this pattern looks, because of how constructive this is, because of the rapid move, right? This big 100% giant gap up, this rapid move, this respect against the 21 EMA, this tightness against the 21 EMA, what really establishing this area of support. And now we're starting to break to the upside. So you're going to have more down days than up days, right? If you look at the base, apologies. Damn. If you look at the base, right, in a cup, let me draw, I'm gonna draw it on the chart. Let me turn my magnet off. Let me get my paintbrush. There, we're gonna do it with an arc, right? All right. Right? Make this a little thicker. So you're going to have more down days than up days when you're forming a base at some point, right? If we're looking at this and let's just say this does, I'm just going to do this for the sake of, I'm not saying this is exactly how it's going to happen. Let's just say it's a uniform correction, right? You're here, right? You're not at all-time highs. There's more. Yeah, there's obviously going to be more down days than up days. We're turning around. We're forming a base pattern, or we're possibly turning around and forming a base pattern. Now, what Bill O'Neill is saying is, and I think you're misunderstanding what he's talking about. He doesn't want to see something like this. This is not what Bill wants to see. If I can I tucked it in there. Son of a. There we go. Okay. He doesn't want to see something like this where you have down days, down days, down days, down days, down day, down day, down day, down day, down day. And all of a sudden you have a rapid advance of like 3 days right to the area. Then that's where he doesn't want you buying here. The reason, exactly, exactly. Fen just put it back. You don't want the V-shaped recovery. What does V-shaped recovery often entail? Right? V-shaped recovery often entails an extension from the moving average, an extension in I don't know VWAP, but like a an extension that warrants a return to the means, right? To get that rapid advance inside of a base, right? And a rapid advance outside of a base where there's no upside resistance, fine. A rapid advance inside of a base gets you super, super extended, then getting to an area of very high probability resistance. You're seeing multiple reasons why, right? You have the area of resistance likely going to pull you back. You have the reversion to means likely going to pull you back as you get extended off of whether it's, moving averages or whatever it may be. The probability of a pullback or a failed breakout becomes extremely high. That's why he's saying that you don't want to see more down days than up days, right? So if we were talking about this here and you were like, wow, this is breaking out. This looks beautiful. It's right in that 5% range. Oh my God, I want to buy this. I would say probably not, because we'd probably have had a extension off of the moving averages. We're super, super extended to the upside. And the probability of us pulling back and squatting back into the base becomes very, very high. That is why. And like crowd is a kind of an example of that. Not a beautifully perfectly illustrated example of that, but kind of an example of that, right? We got, let's say, 1, 2, 3, 4, 5, 6, 7. I'm not going to count these as down days. And then we got, let's just say 1, 2, 3, 4, 5, 5 as it started to break, maybe 6. It again, similar concept of correction, tightening, surge to the upside, and pull back and squat. Um, this is probably a better depiction of what we're talking about, right? And you got to also remember this. This is something people forget all the time. You know, we're looking at weekly patterns, Bill O'Neill, for the most part. This is probably a much better example of what we're talking about, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Let's just say 11 down days on the left hand side, and then 1, 2, 3, 4, 5. That rule is showing is a simplified way of saying we had a rapid growth on the right hand side of the base versus a nice uniform growth on the right hand side of the base. And that rapid growth and that rapid breakout without any sort of pause likely extended us to where a reversion to the means likely we will expect a failed breakout. And that's what we kind of got. And tap put on the weekly chart rounds out. So to kind of summarize exactly what we were just talking about, I don't think that's of any concern right now because of the context of what we're talking about. I don't think I'm very worried about that. Well, there's more down days than up days in NTAP and NetApp. Well, yeah, we're gonna have that. I mean, Charles is 100% right. This is way nicer, way more constructive when you look at this on a weekly and how beautiful it looks at. But it's even beautiful and constructive when you look at it on the daily. But yeah, when we're just turning around and building the right hand side of the base, you're clearly going to have more down days than up days because we're still forming a base. But hopefully that little rant that I kind of went on helps you understand another thing that, talking about extensions off the moving averages and sometimes when we don't get a pause or a break and failed breakouts and things like that. Hopefully that gains some context into that. Some names as I wait for other people to throw some names in there. Okay, ready? Here's another example of right. Just and it's not just down days. It's just like look at how much price action is in here. Look at how rapid of an advance we had. Look at how we got extended pretty quickly off these moving averages, which to me is a little bit easier way to assess it than sitting here counting down and up days. But we had kind of got extended, and there was a likelihood, I think, because we didn't really have much of a pause as we went up the right hand side that we were going to pull back, and we did. You know, and this is why I stood away from this name because even though it was breaking out to all time highs, it just never really got an area of tightness where I could put a buy in. Sure, it could have broken, just kind of took off and went on without me. Completely fine with that. Um, but again, given the get number one, given the current market environment, was number one and foremost the choppiness of the market, especially back here, really just being in the thick of it in terms of choppiness. Let me know that this breakout was high probability of failing. And then also the fact that we were kind of starting to get extended off those moving averages. So this correction was kind of just completely normal action, which is also why it's still on my watch list because I don't see this as negative. I see this as completely normal and constructive. Um, Again, getting just comfortable with normal price action, what is normal and what is abnormal, and understanding like this is a prime example. So because this is all acting completely normal, this has become another name that just continues to be on my watch list. Um, with the way it's acting, I would like to see it get a little tighter in price action, but still on my watch list. Twilio, all right, another name that we are see instead like if it would have kept rapidly rising, we'd expect some sort of a pause. Reason I'm not in this name right now is because we're starting to get this round out. It's starting to make its way up there. Just no real reason to enter this just now. We pulled back here. Maybe we'll tighten up here and give an entry. Maybe we'll rebound, chop around, whatever. Just the name I'm watching. Same thing here, right? Same thing here. Giant. Like this is a to me a must watch. Watch. Strict watch right here. We got this big base, all right? 52 weeks, basically year-long base, giant deep base. And I know, oh, it's over 35, 40%, whatever. Oh, it doesn't meet the base requirement because CANSLIM says if it's more than this, it's not a base. Yes, in the context that you are saying, 100%. In the context that you're saying, I am not going to buy this breaking out. Yes, yes. But regardless, we have a big consolidation. All right, big consolidation. This is worth noting. So, yes, not a base in the sense that I'm looking to buy a breakout above the 186.74 level. No, 100%. But yes, a base in the sense of this has a clear, constructive price action that should be paying attention as we're approaching all time highs, to clarify. Now, right? Big breakdown through all the moving averages, through the 200, looking like it's all right. We're starting to make higher highs and higher lows now. That's where we start getting here. And then we start trending. And now the moving averages are trending. And now we're clearly in a stage two uptrend. And we're going, and we're going, and we're going. And we're ripping through all this upside resistance. And then we get right to this all time high. And we pause and we pull back. Completely normal, healthy action. Now, I think this needs time, right? I think there are people who are maybe looking to buy here as it reclaimed the 10. I think this needs more time. This is a long, big base. I now want to see some form of a normal at least a 3-week pattern kind of forming in here is kind of like my baseline of what I want to look for. I would expect that if this breaks out, it fails. And I'm just going to put that out there. But part of building a watch list is being able to understand, look, financials are doing good. This has good fundamentals. This is growing institutional sponsorship. There's clearly there's a clear trend change in here. This tells me that this is probably going to tighten up and form some sort of constructive pattern here. Hopefully. If it doesn't, well, no problem. Then I just don't trade it. But this is telling me to pay attention to it. So that's where I'm at with Sizzle. Right. Assume you'd enter when it breaks that base. I'm guessing I don't know which stock you were talking about. Sorry, because there's a little bit of a delay, but I'm assuming I answered your question. Rat. I don't see rat. I don't know what rat is. Rat's not coming up as a ticker. So Fen, just I'll elaborate, my friend. We'll get to it. I'll flip through these while people are doing their thing, and then we'll probably get on out of here. We talked about some of these names. I haven't done my full routine. For those of you who do know, I did have food poisoning on Friday, which was brutal. Yesterday was not too fun either. GEV, watching this name, definitely like to see this get a little more constructive and tight. But again, down, 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 down. V-shaped recovery, break, fail, tighten. Normal action. Okay. KRYS. Crystal Biotech. Crystal Biotech. And like I said, if you guys could just give me a little context, either say own or looking to buy, would own since whatever or looking to buy would be helpful for me to just tailor this. I'll go with both on these. Looking to buy on this one, we'll say. Okay, own, clearly, like, nothing wrong with this. Acting very healthy. If you bought back here, it's just trending higher. Nothing wrong here. Watching. Okay. Yeah. Ooh. It's tough because this is like kind of nice, right? This is pretty constructive, right? We pulled into this moving average. First, there was just really, really tight action. Almost looks like we're getting a pure shakeout below this tight area and bounce right off the 20. So this is what I talk about when I love cleanness. Like, just look at trending, tight, 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 tight. What's I'm doing a lot of things that are making me think of movies. Is it Breaking Bad where he does the substance? I don't know. I don't want to get in trouble on YouTube. He's like tight, tight, tight. I think that's the thing. Again, I could be. Hopefully, you guys are laughing. Otherwise, I'm just laughing at myself. Whatever. But super, super tight action. Break and right back in. Looks like it just kind of wanted to like shake out right at that. So maybe you bought here. This is one of those things where like I could see somebody wanting to get in on a name like this, right? I could see we're only 4% off. Like it's so tough. Like, but this is what I'm seeing here, right? We break out, we trend up, we trend super sideways and tight, 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 and then we break out, shake out, and right back into those areas, just like washing some people out. Earnings coming soon. Still not too far off that moving average. So I'd say refer to your trading entry rules. Would I likely buy this name? Probably not. Do I see a reason to enter this? Do I see the constructiveness of what is happening here? 100%. And I try to do that because everybody is going to be vastly different on how they trade. And I follow many, many traders that trade differently than me, that I still see some constructiveness in what they tell me about how they're entering things and why they're doing things. And it doesn't necessarily mean I'm going to follow them. So point of this, constructive, probably a way to enter this. Probably what I would know. If it follows your rules, I see a way to get into this possibly. Oust. Another one of those names that's just kind of getting sloppy. The fundamentals I understand on this one. I just want to see this get more constructive. FTIA. Absolute no for me on this one. Clearly. Very, very sloppy, very, very sideways. We are looking like we want to get below the 200. We're making lower lows and lower highs. We're below the 50, the 10, the 21, the 5. They're all downtrending. We got tons and tons of upside resistance on this name. I can't trade this name because it's aviation related. So absolutely not. That is one of the reasons why I can't. But no, it's just in looking at this name for what I'm looking at, it's just it doesn't show me a reason. Again, is this where you want to is this the name you want to put in the few select names? Look at the RS line, downtrending, definitely a no. So huge no on look, if I'm looking at this and I'm looking at Oust, is if our goal as most of us is to be buying the leaders, be buying the high momentum names, be buying the growth stocks that are going to perform like a SanDisk. I'm not buying something that's that far off of all-time highs that is in a downtrend. Both of these names just don't look like there's a lot of upside resistance and no real signal that we've put some sort of a tightness or a floor in. Maybe you can say, maybe you can argue, some sort of trend bounce here, maybe, possibly. So I could see that as a possible argument, maybe. But when you look at the price action, like there's just no real reason that this is done off of pulling back off of its highs. It's below, like, really, if I'm being honest, I think this is possibly finding its way down to the 50-day or possibly finding its way down to this area. Really, it looks like the 50 is really where between these prior lows and everything, it looks like it wants to go down to this 50. So, like, to me, you're short term catching a falling knife here. And then, like I said, um, with this name, it's like there's just so much, like, this isn't a downtrend. There's no reason to even consider this name at all. At least Oust, I could say it's been a leader. This name is just this. This should be nothing that tells me that this is worth your time. Warren Buff, Warren Buffett getting to buy it when it breaks at 200. So here's one of the things, and I know you said just kidding. You talk about here's one of the things about Warren Buffett. Warren Buffett was not a trader. One of my big pet peeves, and I'm not saying this to you, Liz. I'm just saying because you did say joking, and I know you understand what the context of anything. But when you talk a lot of people, especially that have no context of trading, is they're like, "Well, Warren Buffett did." Warren Buffett wasn't a trader. He wasn't a trader. He was an investor, right? That's like saying, "Well, this person's a day trader, did X, Y, Z." Well, it doesn't matter to me as a position swing trader, right? Everybody has different timelines and different rules and different contexts. On top of the fact I look at Warren Buffett as an investor slash a businessman, not an investor in terms of just buying stock. Like he owns some of these businesses, right? He owned insurance companies. You want to talk about cash cows, cash flow? So there's a big piece of what kind of created this cog in his system of when you own insurance companies and the insurance companies create a large amount of cash flow, right? Everybody's paying their premiums. And as long as you're not paying out more, you're creating this large amount of cash flow that you can invest. And then you take that insurance money from these companies and you're able to reinvest it into the market. You create this kind of churning cog that just generates money. And granted, he's one of the best to do it. I'm not saying like, whatever, he's a nobody. No, like he did things very, very right. But to look at Warren Buffett from a trader's eyes and be like, oh, this is what Warren Buffett did. That's like, a Formula One driver turning around and looking at what somebody who did the Tour de France does for their training. Like you Yeah, you're both racing and it's both competitive, but like what a Formula One driver is doing and what a Tour de France racer is doing is completely different. So why, like, oh, well, this is, it just makes no sense to me. So just understand that. Oh, talk of aviation notes. Are you actually disallowed from buying them due to your job? Interesting. Yes. Yes, yes, yes. So, um, airlines, stuff like that. I don't know if they fall into it, but mostly like those big airlines and things like that, I am not allowed. I actually signed paperwork when I took the job. It said I will not buy these stocks or these type of stocks. There is obviously some gray area within it, but I do just kind of try to stay away from that stuff. Nicely weekly breakout ATX. All right, we're gonna wrap this up, especially because we got Trader Lion. I believe Ariel has kicked off, and I want to watch that. So ATX extended, but if you own it, great. Pretty simple. After April follow through day. Yep. Yeah. You hit the nail on the head. Hit the nail on the head. ATX, nice weekly breakout. Been holding Coke, yeah. Yeah. You know, different. And they're very, very different. And this is what I say. Been holding, the guy's basically like, I'm gonna do a little research real quick while we're talking about this, but what percent stakeholders? All right. All that is going. Yeah, like we're talking about a little bit different, right? Like he owns, like he's one of the largest shareholders in these names, right? It's a little bit different, right? So I don't know. Again, very, what Warren Buffett does and what we do is a total different thing, right? And the other thing you have to remember is the biggest advantage that we have as retail traders, or as, even if you're in here and you have a $2 million, $3 million portfolio, you're the little guy, right? I hate to break it to you, don't want to hurt anybody's feelings, but even if you have a $3 million, $4 million portfolio, you are the little guy, right? The biggest advantage we have as the little guy is the ability to be able to get in and out of names very quickly. In majority of these names that we're looking at, we're not the person that's moving those prices, right? Yes, somebody with a $4 million portfolio, you can trade a small cap name and you could force some movement in that name 100%. But in the majority of these names that most of us are talking about, like, you're not really, there's liquidity in these names that you're not going to move. The biggest advantage that you have is the speed, the ability to get in and out of these names, and to be in what's moving the quickest, and to being able to ride the coattails of those big institutions where they're trying to get in SanDisk, right? And somebody that's a Warren Buffett size of portfolio, or these big institutions, they're buying over weeks and months, right? And if they sell or they buy too much too quickly, they're just crushing themselves. Most of us, we can jump in on a full position with tight risk instantly and not worry about changing the price. We can get in and out of names very, very quickly. And that speed and that ability to ride the coattails of these big institutions, that in order to get in and out of a position, it takes them weeks and months to not hurt themselves, is our biggest advantage. And that's why CANSLIM works. And that's why a lot of these strategies are the way they are. You know what I mean? So, um, why would I want to trade, or why would I care to see what somebody else is doing, like holding an Amex forever, when that is not going to give me an advantage. Some of these, I always say, you look at and you talk to people who are buy and hold people, right? And you're going to hear the outlier stories, but the average person, when they pull together their winners, when they look at their performance over, let's say, the years, the majority of those people, even if they have a name, they're like, oh, I bought AMD at $50. Okay. By the time they get to like 5, 10 years down the road and they start tallying up their winners, their losers, the price fluctuations, this, the years where they were down 20%, 30%, 40%, 50%, and they look at their portfolio performance and their annualized returns from the initial investment to that point, they're normally not beating the QQQs. They're normally not beating the SPY. And you're better off at that point just putting your money in one of those names and not worrying about the possibility that you catch a name that gets bankrupt, or you're better off most of the time just buying the index funds, because you're going to outperform by doing so. So, um, just a little rant on buying and holding, and yeah, and then people are going to say, "Oh, I got this name, I'm up 3,000, 4,000, 5,000%." But then they got four names that they're down X%. And they got names that they also didn't tell you how, like, there's a lot of mechanics behind it. And again, if it was that easy, everybody would do it, and it's just kind of how it is. CANSLIM trading makes more sense for people like us who don't have the liquid coming in. Yeah, actually, yeah, 100% too, right? If you got constant cash flow coming in too, you know what I mean? Like, all right, SpaceX can come out and you're like, I can drop, you know, takes money to make money. Okay, I could drop $100,000 on SpaceX, like, just for fun. Just say, it's like me throwing $50 on it, throw 100 grand on it. We'll see what happens in 20 years. Oh wow, that went up. I made 2 million, and even that, they're like, who cares? 2 million. All right. I could pay for half my kid's wedding or something. You know what I mean? It's a different world when you have that amount of money to make money. And again, my concern isn't that, it's how do I operate in the world that we're operating in. All right, I have to go too. I'm not watching Wimbledon finals. I'm not a big tennis person. If it's on, I will watch it. My grandfather used to watch. Well, I'm wondering, he's still alive. So I wonder if he still watches tennis. He probably does. Thanks, Bobby. Have to go. Great weekend. Yep, we're gonna wrap this up. A lot of ranting today. I apologize. There you guys have it. YouTube, X, description of this has the Discord link if you want to join that. Deepvue, 33% off, plus my codes in the description. If you are a monthly member, if you are enjoying Deepvue, I highly suggest taking my discount code and their current offering, pairing it together, and hooking yourself up with a really nice, cheap year of Deepvue, especially with a lot of the stuff they're doing. My 2 cents. And if you are interested in just trying it out, there is the free month code that I have in there as well. I would make this is actually probably the best time to use Deepvue, because I'm assuming they're going to run this through the length of the trading conference, which is like the next couple of weeks. So if you can sign up to try it for free for a week, that gives you a risk-free ability to try it. And then if you like it, you can then use my code and 33% off and get it the cheapest you can possibly get it for the next year. So that is, if you have been debating trying Deepvue at all, do the free month, try it out, and know that this is the cheapest you can get it over the next year, and lock it in for a cheap price for the year. So that's just my 2 cents if you've been on the fence about checking it out. If you've already used the 1 month thing and you got some questions, some concerns, just reach out to me. I'll see what it is that maybe was your concern prior. If you haven't used it in a long time, my code should work to get you a free month anyway. So give it a shot. All right, everybody. That's all we got.